The UK financial regulator has outlined concrete plans to cap the cost of payday lending in a move that could have serious consequences for the industry. I'm here with Emma Dunkley, retail banking correspondent, to discuss these. So Emma, what exact proposals has the regulator put forward today?
So the Financial Conduct Authority has revealed the limits that it will place on the amount that payday lenders can charge. So starting from next year in January, there'll be a 0.8% limit per day on the interest and charges attached to payday loans. There will also be a £15 cap on the default fee for any borrowers that don't repay on time. And the FCA is also ensuring that no borrower will pay more than double the amount that they took out in the first place. So if a borrower takes out £100 over a period of 30 days, for example, the maximum charge they'll incur will be £24.
And that's quite a drastic change from some of the huge charges that we've seen these lenders charge borrowers in recent years that we've heard could sort of escalate into the thousands of % over an annual basis.
This is a substantial change. In fact, the likes of Wonga, for example, have charged more than 5,000% a year. So this is really needed for all those hard-pressed borrowers that have almost been forced to take out these short-term, high-cost-of-credit loans.
And so good news for borrowers, good news for all the politicians that have been campaigning to have these kind of new, tougher rules on payday lenders. What about the industry itself? Is this the final nail in the coffin for it?
This is almost certainly the final nail in the coffin. Martin Wheatley, the chief executive of the FCA, has himself admitted that the majority of the payday lending industry will be wiped out. So as it stands, there are about 400 payday loan services at the moment, some of which are part of or subsidiaries of other companies that focus on other types of business. And of these 400 companies, all but about 3 are expected to be wiped out. However, one of the significant economists said this morning on radio that he expects there'll be no payday lenders left next year, and Martin Wheatley conceded that this is in fact a possibility. So this certainly is perhaps a nail in the coffin for the industry, which is coming under quite intense scrutiny and regulation, because earlier this year there were other regulations put into force to sort of rein in this industry and prevent a return to irresponsible lending, which is essentially seeing Britons fall into a debt cycle.
We talk about the sort of repercussions for the industry, but what about for borrowers? I mean, presumably this cuts off a supply of credit that thousands of people use every year. Is there any kind of alternative being suggested to them, or might they be driven into the hands of illegal loan sharks? That's often one of the protestations of the industry in defence of their practices, that without them, that would be the only option.
The watchdog has suggested that there'll be about 70,000 people that, as a result of the new cap, will not be able to get a loan, as lenders won't be able to extend it. And as a result, they've looked into this and whether perhaps the majority of them might be forced into, say, loan sharks and other forms of illegal types of credit with extortionate charges. But in fact, their research shows that only about 5% of the 70,000 are aware of the loan sharks and might look at them, but only 2% will actually go to the loan sharks. So in this sense, the threat of being pushed into sort of dodgy areas of lending is quite minimal in that sense.
And what about some of the more traditional lenders? I mean, could we see banks come into this space, for example?
There's certainly more of an onus on the banks to perhaps step into the breach, and it seems like the regulator and even the government is actually working with the major banks at the moment in terms of how they can prevent some of these borrowers from falling into debt in the first place. So for anyone, for example, that's a repeat offender in terms of going into their overdraft, perhaps the banks could look to intervene and prevent them from going to a payday lender in the first place. And then you have the likes of the credit unions who are able to extend credit for much lower costs than some of these payday lenders. So I believe that their loans, for example, have an annual cap of about 42%, I believe. So essentially, the fees that other groups charge will be a lot lower. So payday lenders shouldn't be the first port of call for a lot of these people anyway. You can also get credit repair cards, for example. So anyone with a poor credit history can, first of all, turn to these types of credit cards to gain to short-term loans.
Okay, Emma, thank you very much. And you can find out more on this at ft.com.